What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to go over New York Mortgage Trust REIT. A lot of you guys wanted me to do a review on it, and I'm going to go in depth with these guys in great detail with this real estate investment trust. And I'm going to show you how I study REITs. I'm going to explain that a little bit more in depth with you guys. This is a very interesting mREIT, and it's just there's some things that irk me about these guys that I want to address with you guys. And these guys are having some issues, so I'll show you how I study it, and we're going to look in depth with these guys. And by the way, we're almost at 10,000 subscribers, so if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this REIT out right now. So let's look at these guys real quick. New York Mortgage Trust Inc. Its dividend yield is 14.49%. Average volume is 2.38 million. Market cap is 1.04 billion US dollars. Its year range is 224 to 450. Its day range is 273 to 280, and its previous close is 274. So I first want to address with REITs, I went big on these guys once the pandemic hit. And I bought the dip on a lot of mortgage-backed real estate investment trusts, like Arbor Realty Trust, like Sachem Capital Group. I did National Health Investors, NHI. I'll probably do a review on these guys as well. A lot of I did some with Stag Store. I bought the dip on those guys. I really capitalized on those guys, and I'm getting a good return. I'm getting good dividend hikes. These guys you got to be careful with. So first, this is in the past day, it's 276 when it closed. Past 5 years, it took a huge nosedive. I mean, okay, it's a mortgage-backed real estate investment trust. Took a hit during the pandemic. That's kind of a given. But then look at this. So at one point it was 93.60. It went down to 78. So we're going to look at this. I'm going to take the S&P out. And look at this huge nosedive. So, okay, so 2005 was high. Then you can say the housing crisis, it took a huge hit at 336, but it just never really improved. So now you're seeing a huge dip, and it's just whoop, and it's just in a straight line. So that's already a red flag for me. So I'm going to go over these guys as a company. So their strategy is their investment approach is to acquire, invest in, finance, and manage mortgage-related and financial assets. They target residential mortgage loans and from various sources, including distressed markets, multifamily, commercial, and mortgage-backed securities. So, okay, 4.6 billion in their total investment portfolio, 1.5 billion market capitalization, 0.6% portfolio recourse leverage ratio, and a 14.5% dividend yield. So the dividend is high. So we always need to do a little bit more digging. So I always tell you guys, when you look at dividend stocks, they're high yield dividend stocks. You need to understand why. Especially with mortgage-backed real estate investment trusts, they're trouble. And I'm going to show you some things that are trouble with these guys. Here's their revenue in millions US dollars: 336 in 2015, 2016, 319, 2017, 366, 2018, 455, 2019, 694, 2020, 350, then 2021, it was 206. So there's still a decrease in revenue from 2020 to 2021. Now you can see 2020, you can blame the pandemic. So if you look at Arbor Realty Trust, when I posted my previous videos with those guys, their revenue increased. That's why I have a goal of getting to up to 400 shares with these guys and letting it fly, because they are hiking their dividends, which I'll go over the dividend history with NYMT. So Arbor Realty Trust is hiking their dividends, and the revenue is going up. So that's one thing that really attracted me with Arbor Realty Trust. I can't talk today. I'm like choking on water. And basically, you have to study the trends. And then all of a sudden, way back, if you compare things against the S&P, that can also give you red flags. There already is a huge red flag. I'm going to go even further to investigate these guys. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But so far, I'm not touching these guys with a 10-foot pole. So let's check out their recent earnings. So let's go in September 2021. The revenue was 81.91 million. This is quarterly. Net income went down 49.26, diluted EPS 0.1, net profit margin 62.97%. Was down 28.39. Then the revenue again, 67.11 million, down 28.9%. Net income, 55.02%. Diluted EPS 0.06. That's down. Net profit margin is 36.73. March, negative. Do you see that? 18.18 million, way down. 126.16%. Net income's down. Ouch. Negative 73.85 million. Look at that, 241.45%. So, like I said, further digging and further research can get you to conclude things. And ouch, June, the most recent financials, 4.91 million quarterly, net income negative 71.9, diluted EPS negative 22, net profit margin, ouch, minus 1,463.68%. Net income, operating income is negative 91.71 million. Net change in cash is 147.71 million. Ouch. That hurts. That stings. It's already looking to be a yield trap. Now let's see what else is worse. Oh, come on. We're gonna be doing one soon, so don't worry about that. So let's now go to the dividend history. 2009, 23 cents of dividends, and then 25 cents. Then it dropped down to 18 cents in 2010. Then 2011, it was back to 22 cents, and it was at 25 cents. And then 2012, it was 27 cents. Stagnant, 27 cents. 2015, 24 cents. 2017, 20 cents. Now, you can blame the pandemic at 5 cents. And then 2020, it's 8 cents. And now it's stuck at 10 cents, not really recovering. Whoa. Does somebody see dividend cut potentially? And again, this is not financial advice. This is for entertainment purposes. Only disclaimer in the description. A payout ratio, this is per Zacks, 1,333%. I don't think that dividend is sustainable if it's going to be that high. Number of dividend increase in the last 5 years is 2. You can blame the pandemic. Dividend growth in 5 years is negative 19.50%. You can't blame the pandemic on this one. This is ugly. The annual dividend, if you bought one share, you made 40 cents at the 14.49% yield. That is a yield trap. It looks very attractive, as I always say, when you're out in the dating scene, you see somebody that's very attractive on the outside, but on the inside, they're just toxic and rotten. That's a yield trap. That is just... It's same thing. Looks really attractive with the dividend yield. Hot to touch, blah, blah, blah. Very good looking because of the dividend. And then it just, inside, it just sucks your life out. So if you want to get decreased dividends, pop-up things popping up again. If you want to get decreasing dividends from 20 cents to 10 cents and it hasn't recovered, go for it. But I am not touching this one with a 10-foot pole. So I wanted to do a quick video and review these guys. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And don't worry, Matt, we're going to get a video very soon. So we're going to have a feature collaboration live stream with each other, and that's going to be a lot of fun. We'll get Dapper Dividends eventually, and Ryan as well, and hopefully Ian. We'll get him going with PPC Ian. So that'll be fun. So I'm looking forward to future collaborations once I get my schedule set up with my travel nursing, and I can get my schedule set up for my rotations and everything, and it'll be smooth. So you guys have a great Sunday and take care. And big thing is, with the market and everything, it's going to be very interesting. So I'm going to still continue to dollar cost average. I'm still going to try to invest in ABR once these paychecks start kicking in. And let me know what you think of this dividend stock, this mortgage-backed real estate investment trust, as well as some dividend stocks that you want me to review. So you guys take care. I'm not going to do a video Monday. I'll do one on Tuesday. Have a good one.